Hello and welcome to Business Today Television. I'm Siddharth Zarabi and with me today a very special guest, Harsh Mariwala, one of India's most well-known entrepreneurs, the founder and chairman of Marico Ltd, a top consumer goods company that is behind a portfolio of brands, many of which you know: Parachute, Saffola, Hair and Care, Nihar Naturals, Live On, Setwet, Kaya Youth, Medicare and Revive, and that list is pretty long. Harsh is widely credited with transforming Marico from a small family-run trading business into what is a highly successful Indian multinational. Good to have on the show, Mr. Mariwala. Let me begin today with your book, and this is the book that you titled Harsh Realities, The Making of Marico. Book that you have co-authored with Professor Ramcharan. It begins with the date of 27 January 1990, a date that you say is very, very important, a date when the tide turned. How did the tide turn? Take us back to that date and explain to our viewers why do you say that for that particular date?
Yeah, it's Siddharth, thank you very much for being with you on this show. And this was, looking back at my own journey, this has been the most important day in my journey. If this tide had not turned on that day, I would have been struggling. Looking at the way the business was being managed, I was a part of a family run company which had multiple businesses and 9 family members in the same company. And it was very complex to manage. The businesses did not have any synergies. I was not able to attract good talent because of perception about being a family managed company. The location of the office also was in the heart of commodity markets, very difficult to enter the office, not able to build an image of a good employer. And finally, in terms of allocation of financial resources, it was difficult to plan the business because multiple businesses required different needs of capital. So it was impossible for me to plan the future because one was not sure what will happen to the other businesses. So I was able to resolve all these bottlenecks, you may call it, or hindrances, you may call it, in terms of my own journey by taking the family in confidence, building a consensus over a period of 2 years involving all my cousins. And it took almost 2 years to build this consensus. And the result happened on this date, which was in a way liberating for me. And that has given me a lot of freedom to do things my way. And looking back, it has been the most important decision in my journey. So that's why I have started the book by saying the tide has turned because it is the most important day in my own journey.
Very important points, and I want to follow this point that you made with a more contemporary point of view where we can take some of your learnings and pass it on to our viewers and the young budding entrepreneurial class that India is now founding. Mr. Mariwala, you said that you sort of created this idea out of a family business. It took you 2 years. There are a lot of entrepreneurs, young graduates, tech guys who go out and found companies, and they face different challenges. From your perspective, to them, is it more difficult to carve out something from an existing business, or is it easier to do a greenfield operation?
I think a lot will depend on the kind of business one is and the competencies which the entrepreneur is bringing to the table. If the entrepreneur is able to identify something unique, something pioneering, something which is very innovative, then it may be a good idea to carve out a different business. If not, then if that business which the family member, the entrepreneur is entered, it itself has a lot of scope of disruption or steering it away in a different direction, just like the one I did, because I converted the whole business from unbranded to branded. That also is an option. So there is no right answer in my case, in this case, sorry. And it could very well depend on the type of business one is in, and also the type of entrepreneur who has to decide whether to build on the existing one or to start something new.
Okay, let's also get you quickly to explain today the company that is Marico in the simplest possible terms. I sort of just tried to relate it to a wider audience by talking about the brands who they touch and feel every day, and that's Marico for them. But if you were to give us a quick snapshot of the company, I mean, we can talk about the financials, a market cap of close to 73,000 crore, last year revenue on record of 8,048 crore or thereabouts. But demystify what Marico means today.
So Marico is actually operates in areas where it can become market leader. So if you look at our portfolio of products, in virtually each and every product, we are market leaders in their own segment. We believe that we have to move towards number 1 or 2 in whatever we do, and wherever there are opportunities for us to grow. That means the portfolio choice is very, very crucial to Marico's success. We have to enter a portfolio where we have a strong right to win. And I think that's the key strategy in Marico. We want to be focused. We want to be focused on beauty and wellness, but not all parts of beauty. For example, we may not enter mainline shampoos if we don't see ourselves becoming market leader, and it is virtually impossible for us to become a market leader in category like shampoos, where it's dominated by multinationals and global brands. So we may just not enter that category. But in a market like Bangladesh, for example, if there is a one player in levers, but after that the number 2 player is vacant, we may look at that option. So number 1, number 2 is a very crucial part of our organization's DNA. And I think that's built on innovation and pioneering initiatives. I think the second thing I want to point out is growth. Growth is very important for us. We have to grow on a perpetual basis. I don't want to see a situation where in 1 year I grow by 20%, next year I fall by 10%. Every year I have to show growth, and the growth has to be backed up by profitability also. The profit growth also has to happen. So both top line as well as profitability. Number 3, I would say very, very high degree of trust on people and talent, because ultimately in FMCG or any other company, talent plays the most important role. There is a war for talent, and what do you do to attract the best quality talent and retain them is a big challenge, and that's where we have done well. We have a very strong, very good culture where people enjoy working, they learn a lot, they grow a lot. So attracting talent, retaining them is very, very important part of our journey. And finally on governance, which means that not only you have to do things in the right way in terms of legal compliances and things like that, but be fair and look at the organization's interests first. And now the whole subject of governance has got expanded to what is known as ESG, which is environment, society and governance. So I think we have converted the journey from governance to ESG, and that gets reviewed at board meetings. The board plays a very, very important role. And now the promoters have taken a back seat in terms of not managing the company on a day-to-day basis, but we are more like strategic investors. And we're building the company to be there on a perpetual basis from a long-term point of view. Tomorrow, even if something happens to me, the company should be able to continue being a board-driven company.
Those are good points. In fact, in the book, I read in one section about Uday Kotak saying that you've created value for all stakeholders and the development of the HR function, which you just spoke about. Given the startup frenzy and the race for talent, Bangalore, sometimes people say that is the startup capital, which it is, but it's also the place where you have to really fight for talent. How should startup founders approach the question of people? What are the lessons that you can share with those people who are trying to, double quick set up huge companies?
So I think the first thing is to realize that talent is the most important asset you'll have. That's one. Having realized that, you have to identify what is unique about you which will attract talent. Unique compared to where you are planning to attract talent from. For example, in our case, at that time when Marico was formed, we decided on employee value proposition, which was leveraged on meritocracy, empowerment, and growth of the person. So, for example, an MNC company a lot of decisions would take place at their headquarters in UK or USA. In our case, everything was decided here in India and in our corporate office. So decision making was fast. People at the middle, senior levels were getting to decide things which in a MNC would never be given to them, because a lot of decisions were taken being a part of a global company in their headquarters. So that was unique proposition for us. And that cut ice at that time because the employees said that, okay, if I can be far more empowered, then I'll learn much more. I'll have a say in the organization's future. And I think that's cut ice. So I think depending on the kind of industry you're in, you have to craft out something which will make you attractive to people to join. But that's not enough. You need to have attraction in terms of retaining people. So what can retain people apart from stock options and financials is also very key. Things like challenge, things like the culture of the organization, which is without any politics or without any backbiting, growth, challenge, the quality of talent, leadership styles of top leaders. These are very, very important things for new employees to know, and I think that's what will attract them and retain them in any organization.
I
The war
also,
for talent has to be looked at from a very top level CEO perspective. HR function is as important as any other function. Unfortunately, many entrepreneurs don't invest so much in HR, but I think that's not right. You have to look at HR from day one, the day you started business. And in my case, in case of Marico, the first employee we had was the head of HR.
okay, that's a important piece of advice. I want to turn you towards finance, which is the lifeblood of any business. And I was reading this very interesting section in the context of your public issue and raising funds. Mr. Mariwala, debt drives a business, but it has also the potential to be the death of a business if you have a huge debt burden. And we've seen that in the Indian context. I want you to relate, before I ask you the main question, relate to us that particular incident where your negotiations with Goldman had broken down. What was that? And then I will try and get you on another point.
Yeah, I think the whole reason why we went to Goldman Sachs was because I had taken a personal debt, not a company debt, personal debt because I had bought over interest of two of my uncles. So I had to pay them money, and that's why I took debt, thinking that over a period of time I will either go to a private equity player or go public and retire that debt. So that was the genesis of the debt. It was debt in my hands, and the public markets were in a bad shape in 95 or so. So I was not able to go public, and that's why we started negotiating with Goldman Sachs. We reached a point, but at some stage the negotiations didn't progress further. And then finally we went public in 1996. So I think that's the background of going to Goldman Sachs, and it is not a corporate debt, but it was a personal debt in promoter's hand, for which I had given my shares as escrow and as a guarantee because I had raised that debt.
Let's come to the broader question around debt. We've seen what's happened in the last 5-6 years. An entire bunch of companies has sort of gone down the tube in some ways. We've also seen the development of a policy framework, a regulatory framework, the introduction of the insolvency law. And like someone said recently, capitalism in some ways has been redefined in the last 5-7 years in India. For new entrepreneurs who have access to larger pools of capital than what it must have been when you started off, what is your advice with regard to taking on debt in the manner in which some of these companies are doing that?
So I think you'll have to do your own planning, but the key thing is to have liquidity on hands and provide for the worst day. Who could have imagined something like a pandemic, which has hit certain sectors far worse than some other sectors like tourism or hospitality or airlines. So I think the key thing is to have a risk management framework which will decide how much debt you want to take, how much growth you want to drive, what is the stress which that debt is creating, and look at different scenarios and decide what is sound for you. Because this pandemic has clearly taught people that you can't be very low on liquidity, and all of a sudden something goes wrong which is beyond your control. The whole business should not sink, and we've seen many businesses sunk because of the fact that they just didn't have resources, though the business had potential, like of say Future Group and many others, which will, I think, will come out over a period of time.
Important point there. Mr. Mariwala, I also want to get you on another point, and this is again with respect to the approach that many startup entrepreneurs these days have. They want to create scale, reach a certain size, and then they hope for an exit and live happily after. HUL had offered to buy you out. Tell us why you turned them down about that incident. What really happened?
Yeah, I think it's but natural for any large player to say that I want to buy smaller players. And we also have done the same thing in Marico by acquiring brands like Beardo recently, Just Herbs. So there is nothing wrong in being acquisitive or going after inorganic growth. Having said, because the company was doing well, we had strong brand, we built it up. So there is always any company would say, okay, let me offer something to the promoter. If it cuts ice, well and good. If it doesn't cut ice, it's okay. It will not come in my hands. So I think they started with that kind of approach. But I am a kind of entrepreneur who I'm not monetarily, shall I say, hungry. To me, building a business is far more important than building wealth. And I think I was very clear that I wanted to manage business, to grow it and make an impact. And I was not after money. So I think that was the starting point, that there was huge resistance from my end to sell out. Having said that, was I taking a blind risk? The answer was no. I did a lot of deliberations, consulted a lot of people, evaluated what can we do, because ultimately they are a much bigger company, they have better distribution network, they have more financial power in terms of advertising, money spent. So, but having considered all that, we came to the conclusion that we can take them on, because this is some business which I know inside out. It will be managed at the top level from our end. At a larger company level, it would be managed at 2 or 3 levels lower. So our ability to take them on would be there. We had a strong brand. We were weak in distribution. We said that we will improve our distribution network when they came in. So all in all, the decision to take them on was based on a strong rationale. But the starting point was, as I said earlier, not wanting to be financially greedy at a personal level.
Absolutely, and I think that comes through in the formidable lineup of brands that you have done. I want to take that forward really, and this is to do with hair oils, more to do with consumer habits, because there is a debate on the future of hair oils. You have spoken about this in the past as well. But for the younger generation, Mr. Mariwala, will hair oil still remain in fashion, or do you see that changing and the company also responding to that evolving trend?
So it so happens that a lot of people are still using loose oil. So there is a huge opportunity to convert loose to packed. Okay, that's one. Having said that, if at all there is some fallout of usage of hair oils, it would be mainly in highly urbanized, very rich localities. In a city like Bombay, it could cover maybe parts of South Bombay, not even full South Bombay, which is a minuscule part of the total population of India. And considering the fact that a lot of people are using loose oils and hair oils, packed hair oil, there is a potential. The market is still growing. So if you ask me in the near future, 3 to 5 years, am I pessimistic about it? Not at all. In fact, I personally think that the growth rate will continue, and we have a big stake in hair oil. So I'm quite confident. And we measure this because it's very important that we know exactly what's happening at the consumer end. The other thing which we are trying to do is to say that what are the benefits of hair oil? And there we run campaigns where we are teaching people to to use hair oils prior to shampooing. So there are huge benefits of hair oil in terms of hair fall, dandruff, hair keeping hair soft, and I think that's what we do. And even in the so-called richer or wealthier communities, as people use hair oils, they may not use it post-wash, they use it pre-wash. So I think we have converted that post-wash habit to a pre-wash habit before shampooing. So all in all, I'm saying that as of now, I'm feeling good that it is getting traction. It will continue to get traction in terms of growth rates. And it so happens internationally also hair oils is coming back in terms of fashion, and we're seeing that the developed markets in US, UK also have realized the benefits of hair oil being natural. And I think that we are seeing resurgence of the natural wave in terms of the usage of hair oils going up internationally.
That's very interesting. I want to ask you about another thing that's happening in the broader industry, and from your point of view as an industry leader. What are your views on the recent issue of many FMCG companies boycotting and not supplying a very large B2B marketplace, one that is actually emerging in some ways, because their business model was cutting off distributors? I'm referring to the issue that's going on with Udaan, which is a B2B marketplace. If you are aware of this,
I am not that familiar with it, but all I can say is that FMCG companies have to look at all the interests, because ultimately you have a distribution network. If the distributors feel cheated or left out, or if their overall financials go down, and partly the impact because the modern trade as well as the e-commerce is there on distributors. Because all of a sudden, a certain part of their business which they were doing is taken over by modern trade in e-commerce to the extent of about 30%, so 25 to 30%. So again, one likes of Udan again impacting them would mean that the companies would you lose distributors, or distributors may not be able to make money with reduced volume. So they will have to look at, depending on the distributor, the town, and the impact it is creating. You will have to manage it in such a way that that you are able to continue distribution, because ultimately the benefit of direct distribution or through your own distributor route is far higher, because then you're monitoring all the retailers, going to them, visiting them, and ensuring that the stocks are held by them. And something like a digital platform may not be able to do so. But how do you coexist between the two of them is the key challenge. Because the likes of Udan will also have certain benefits in terms of supply chain, meeting all of a sudden some demand peaks. So the key challenge is how do you maintain both this as well as that. And I think that's the big challenge which the FMCG companies have to realize and meet.
Let me ask you about the broader debate around e-commerce. We've seen the
Yes.
traditional retail segment in India, and we've seen big money also come into it. Where
Yes.
is it going to evolve, and what does it mean for our traditional retail segment, which is a politically sensitive subject as well?
So we are clearly seeing the pandemic has accelerated trend to buy digitally, and I think that's led to increased sale of products through e-commerce route, which is currently before pandemic we were doing about 3 or 4%. Now it's gone almost to about 9 or 10% of our sales. So there is a huge increase in that, and the consumer also have got used to this habit of ordering online. So I mean that's one trend which will continue. And then there is a modern trade also, which because of pandemic it got a little, shall I say, got impacted. The grocers got an opportunity because modern trade was not able to operationalize because of the air conditioning and restrictions in terms of entering malls and things like that. So net, I would say that all three will coexist, and you will have to, the retailers will have to, grocers will have to change and offer whatever either the modern retailer is offering in terms of an ambience or ability to inspect the product, or in terms of e-commerce, in terms of ability to return the product. So I think this will have some impact on the grocers, the retailers, and I think they'll have to change. But I can't see a situation where I mean they'll vanish. It's in India, the big country, in big cities, there is a huge shortage of space. So in many areas, modern retailers are just not able to be there because of non-availability of space. So I think all of them will coexist, and we'll be in a situation where I think all of them will have to learn to live with each other, and leverage on each other's strengths and learn from each other.
Well, there is so much more to learn from you, but I'm coming to the end of this conversation, and I want to end it with this question that's very close to my heart actually. 6 decades of entrepreneurship, of having seen the evolution of not just your company but India's economy, and also seeing how the mood has changed as far as entrepreneurship is concerned. A final word of advice from you, Mr. Mariwala, for all those budding entrepreneurs across the length and breadth of this massive country.
So first of all, I would like to congratulate these new age entrepreneurs entering businesses without any family background and without any families managing businesses or backing them on their own. And I think that's phenomenal. I think this is what we wanted, and this is what they have done, and this is just the beginning on the lines of all the successes and the IPOs which have happened in the recent past and likely to come in. We will see a multiplier effect of all this in the Indian economy. And I think that's exactly what is needed for driving our economic growth, because beyond a point, you can't go on looking at government driving economic growth. All of us have to drive economic growth, and entrepreneurs are the most important link in driving economic growth. So I'm very proud and I'm very optimistic, and I strongly feel that they are doing a great service in terms of building these new age businesses, which is needed for India. And I think that will set a big example to other entrepreneurs to enter. Of course, there will be some failures, but it's okay to fail. because ultimately, collectively, they will be able to add a lot of value through growth, which is good for all the stakeholders, whether it is the promoters or it is the employees or society or the associates. Finally, I think before I just log off, I just want to talk a little bit about my book, which was written with an intention of giving something back to the society. And all I can say to your viewers is that this book is not only for entrepreneurs, of course, it is for entrepreneurs, but also for professionals, for students, and even housewives, because it is written in a very easy to read story format, and it is peppered with nuggets of wisdom by Professor Ramcharan, who is a management guru. He has written 30 books selling more than 4 million copies. So all I can say is that there will be a lot of take home value for the reader, and I hope that the reader picks up a copy of the books and reads it. And I'm absolutely sure, based on whoever I give on the book, that they found it extremely interesting and relevant, and with lots and lots of take home values to improve their own journey. Thank you very much.
Absolutely, Mr. Mariwala. In fact, that's the book that I have in my hand, and definite read.
Yeah, maybe I can also show for this is the book.
Well,
it's very well designed cover, and I think
you'll have to kind of bring it towards that. But it's a great book, and I hope people take out the time to read it. Mr. Mariwala, interesting conversation. I know there's so much more to discuss, but that's all the time that we have today on this show. Thank you very much for your time. With that, it's a wrap. If you've been, thank you very much for watching.
Thank you, Siddharth. Thank you.